So in terms of capital appreciation, at least one tactical approach that you could do is don't look at it from a monthly perspective. Look at it from a yearly perspective. So you have to realize that 50,000 times 12 is roughly about 600,000 pesos. In dollars, it's roughly about 12,000 US dollars as well. What people miss out, especially for people who want to quit their jobs and just fully invest, is they look at it from a perspective of, I need to earn this much per month and I need to be able to either buy, sell, either trading to be able to get that amount. Hey guys, so in this video, I want to talk about how you could earn 50 to 55,000 pesos a month on a regular basis on a passive way. And if you're watching this and you're part of our global audience, it's about $1,000 a month. So just to give you context on where that came from, I was at a talk last week. Right after the talk, there was someone who approached me, asked me some questions about investing and also getting passive income. Given that he was an employee all his life, his income was basically derived from what he got from his work. And if you're watching this, I want you to realize that we have two types of income. One is what you call active income and the other is what you call passive income. Active income is what you get by you physically actively working that allows you to generate revenue. That could be you're an employee, or that could also be you're a doctor or an accountant, where you're using your mind, your skills, your time, your labor in order for you to work. In short, you're trading time for money. In the other side of the equation, you have passive income, where you have assets, you have money, you have investments that's working hard for you, that in essence, it helps generate recurring return for you. And that being said, that will be the context of this entire video, because the person also realized that, yeah, I actually need to retire. The guy who asked a question about it already speaks volumes of how his mindset is, and which is very, very good. You have to realize this. Active income will at a certain point do so much for you, especially if you are at the prime of your careers. Your active income can give you lots and lots and lots of revenue. However, as you get older, that starts to diminish, because there will be someone who will always be younger than you. There will be someone who may be also better than you. And if you try to analyze it, you're just one person. For you to be able to generate, it has to be you doing the work, and you only have 24 hours. You can't make 2, 3, 4, 5 pieces of yourself to do the same thing. And that's why passive income is very, very interesting, because it will work hard for you even if you're old. It will work hard for you even if you cannot physically work anymore. And above and beyond that, it's literally leveraging that you can get revenue not just by you alone, but by creating different sources, different asset classes, that it's not just anymore geographically defined in the Philippines, and it will allow you to get something even from other parts of the world. So how can you actually get 50,000, 55,000 pesos or $1,000 a month? Basically, when you are investing also, there's basically two ways on how you could earn, either via capital appreciation or via by cash flow. And when you're going the capital appreciation route, it actually means that you have to sell bits and pieces of that asset for you to actually make money. And just to give you context to that, the person who asked me that question, he said that what I do right now and where I live and my lifestyle also, 50,000, 55,000 pesos is relatively okay for me as well. The goal isn't $1,000, it isn't 50, 55,000. The goal is what you need based on your goals and what you're actually spending. What I want you to do is, while you're watching this video, write stuff down and try to apply it also based on the expenses that you have or based on the expenses that you want also. And just to give you context, that person who approached me was single and had no plans to get married. He wasn't also a breadwinner. So he said that if he goes back to the province also when he's older, his cost of living wouldn't really be as much. So in terms of capital appreciation, at least one tactical approach that you could do is don't look at it from a monthly perspective. Look at it from a yearly perspective. So you have to realize that 50,000 times 12 is roughly about 600,000 pesos. In dollars, it's roughly about 12,000 US dollars as well. What people miss out, especially for people who want to quit their jobs and just fully invest, is They look at it from a perspective of, I need to earn this much per month and I need to be able to either buy, sell, either trading to be able to get that amount. What I want to submit to all of you is this: if you're going via the game of capital appreciation, you don't have to look at it anymore from the perspective of an employee. I know the context of that also because I was an employee also for 5 years in my early 20s, that if you look at it from a perspective of an employee, you will always look at it that I need to get this much on a monthly basis. But why not stretch it? Because there will be some times that if you look at it from a monthly perspective, that means you have to be more active in churning those amounts. What you could actually do is look at it from a 1-year period and try to hit that amount. So what do I mean by that? We are now in August 2022. If you would want to look at it from a perspective of passive income, what you need is, from a capital appreciation perspective, you need to get revenue this year that would be about 600,000 pesos, sell that, and that's what you would use for your expenses for 2023. And in the same way, for 2024, you would need to generate 600,000 pesos by selling bits and pieces of the assets that you have. And it doesn't matter if it's stocks, it doesn't matter if it's bonds, as long as anything else that can give you capital appreciation. And then you start to compute how much of the assets that I have do I need to sell in order for me to hit that 600,000 mark. If it's a very, very good year, let me give you an example. What if it goes to 1.2, 1.8, 2.4 million? That actually means that, hey, I'm only spending 600,000 a year. I got 2.4 million. Now that gives you an option. You can take that 2.4 million pesos out and stash it already, where you get 4 years already of solid operational expenses. That also takes the fear away, because no matter what happens over the next few years, even if you make mistakes in your investing, even if the market is really, really bad, you're already covered. But if you want to take the more aggressive route also, you have 600,000, the remaining 1.8 million, still reinvest it so that it has the ability to make more. But again, you're putting yourself at a level of risk that when you reinvest it, it doesn't mean that it's gonna earn again. It doesn't also mean that it stays the same. There's a chance also that you lose. So if you want to earn a bit, but you want to be more conservative, take the 600, use that for 2023. The remainder, the 1.8, stash it into something that will give you a fixed amount of return. There are some banks that can give you about 6% also in terms of interest rate, which is relatively safe. And that could be an approach that you want to get also, so that your money is not just sleeping, but it gives you a certain amount of return as well. For cash flow, I've made a lot of videos about this, either for the REIT videos that I made or for the dividend videos that I made. You can just search it, Marvin Germo Dividends, Marvin Germo REITs. But this is how it normally would go. What you would get on a yearly basis will be defined by the capital that you put in and the risks that you're willing to take. If you place 10 million pesos, putting it in something that will give you a 6% return, then essentially you hit your 600,000 pesos a year for the rest of your life. What if you have, like, say, 8 million or 7 million? If you invest that into something that's giving you 6%, then if you try to compute it, what you will get would be less than 600,000 pesos. What you could actually do for that as well is this: the lower your capital, the higher the rate of return that you actually need to get from a cash flow basis. Meaning, it doesn't mean that you get riskier assets. It probably means also that if you're looking at REITs, if you're looking at common stock, you wait for a correction to happen, a massive correction to happen, that instead of just getting 6%, if you're buying it at this price, you can wait for it to correct a bit. And as it corrects a bit, your dividend yield would also be higher. And I think that's the biggest advantage of going into stocks and REITs, particularly stocks that give you dividends. The yield that you would get is not fixed. And if you're very sensitive and if you're very analytical on certain price points, that when it hits certain levels, your dividend yields will go higher, then you can do so. People have this misconception that if you invest in cash flow or invest in something that will give you a passive rate of return, the only way for you to be able to get a higher rate of return is to go into something that's riskier in terms of the stock or the quality of the company. Not necessary. You could go for almost the same company that's good, but you just have to time it very well that it's at the point where it's lower and your dividend yield will be higher. That could be the way to go, meaning smaller amounts of money, you have to be more tactical and wait for the prices to go lower so that your dividend yield would actually be higher. Now, another interesting thought about that is this: you could do hybrid. What if you only have 5 million, invest the 5 million, say at 6%, that gives you about 300,000 pesos a year. You have a shortfall of half. What's interesting about that is, while you're working and while you're watching this, and if you're still in the prime of your years, you could already start getting passive returns However, you make up for that 300,000 by getting active sources of income. So especially if you're in your 30s, there's not a very, very strong compelling reason for you to stop yet. And there's still a bigger chance for you that you can, from your revenue, from the earnings that you get from your other sources of income, you could pull that together as you start to earn more, and then boom, pump that in and add that again to your current stockpile of passive income sources. It's not that you have a goal already that you want to hit, that you stop right away and just live passively. If you're young, you can work towards that already and get some of what you get and just add and add and add and add. And what's interesting about that is this: as you start doing that and you start adding it, what generally happens is this: your nest egg, where you're actually putting it, it gets bigger. And what's nice about that, as it gets bigger also in number, time progresses. As time progresses, it gets bigger. The risks that you can take when you're older becomes smaller. But because you've put in more and more and more on a yearly basis, meaning your nest egg gets bigger because as you earn more, you make it bigger, you could possibly earn the same amount of money, of cash flow, even if you're taking less risk. What do I mean about that? If you continually put and then suddenly your entire retirement portfolio hits 20 million, that actually means that if you actually just want to get 600,000 a year and you invest it in something that's of 3%, you would still get your 600,000 pesos with an investment that's very, very conservative already. The lower the rate, the more conservative it is. But what's interesting about that is if you choose to still maintain the 6%, then you actually earn more. Then you actually either have couple of options. You could spend more on a regular basis because it came already from passive sources of income. Don't be liberal on spending and enjoying passive income because it's already passive. It's already recurring. It will always be there. Or you could pump that back in as an investment so that you have actually more as well. But what it gives you is options, and that's what I want to hammer to people. The reason why we invest early is not just to earn more, but so that you have options. And that's what financial freedom literally is. It's not really the yacht. When you see people in YouTube show off their cars, their houses, their planes, their yachts, etc., those are stuff that money can buy. However, the real essence of financial freedom is options. That if you choose to invest the money again, it's okay. If you choose to spend it, it's also okay. If you choose to give it away and still live a life that allows you to enjoy life, then that's well and good as well. I hope you guys got a lot. If you stayed up until the end, up until this portion, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. And if you want to know more about stocks and crypto, links are down below. If you want to open an account and trade the crypto markets and stock market, links are down below as well. And check out my courses, check out the books that I have to help you build a solid foundation on investing. That's it for now. If there's one thing that we'd like to summarize this entire video on, is that build passive sources. It doesn't have to be super big right now, but when it piles on, those passive sources will just keep on churning and churning and churning a return for you. Marvin Germo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.